Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And what up, my guys? We're going to talk about some predictions for 2025. You know, the stock market's a very confusing place. Analysts are always wrong. So we want some community input on what's going to happen next year. We're going to give you some little talking points about some things that we're thinking about going into the new year. All right, get to it. So, Dylan, you want to walk us through this first poll here you talked about?
Yeah. So if you go, I don't actually know how there's people already voted. I just put this up. But if you go onto our site or our YouTube channel, just go to posts. It's right there. We all know analysts are we actually did a thing on this. They're right 47% of the time, which is less than half. You only have two directions. So we figured we'll do the Two Stupid Guys community, see what it comes out to. We're just trying to do, is it bullish, bearish, or iffy either way? All right. That's all it is.
Yeah,
Okay.
love it.
So super fast. This is the SPY over. It's technically including. It's 1 year from now, which is 12/29. So there's like an extra 2 days in there. But you can see it went up about 25% more when you add dividends. That green square there, that is the Trump effect. That is Trump. Yeah, that is Trump being winning the presidency. So
Uh-huh.
I have been very open. I think 2025, logically, he's not going to do well. But I seem to be in the wrong here. So the Trump effect is the green square. Is that transient or is that going to continue? All right, go to the next one. This is just the cues. Same exact thing. Trump effect is real somehow.
Slightly, yeah, slightly more exaggerated because it's accused and everything's always a little bit more ridiculous on those.
Right. This is the SPY over the last year. I just want to show you the two segments. So financials carried it, hitting almost 30%, and then the communication services. Netflix alone, I think, was up like 80 or something. That's in that communication services. So
Yeah.
two big sectors really carried this. All
Mhm.
right. And then I just wanted real quick. This is just the yearly, 2003 through 2023 SPY. Just the rate of returns, not many negative returns. All right,
Yeah.
just not that many. It's usually pretty steady. And also, if you look at that, not that many under 8%. There's only like
Mm.
four. Yeah, there's
Yeah. It's always funny too when you're looking at the performance of different like mutual funds and stuff. How when you look at the last 10 years performance, it's like so much above like the long term average. It's just been crazy. We've had
yeah,
so many outsized, large, positive years of the last few. Like this is 30%, almost 30%, almost 30%. Like it's crazy.
yeah. I agree. To me, you take over here.
Yeah, yeah. Well, I mean, one of the effects of that is like, where did that 30% growth come from? This is get beat to death, whatever. This is that Buffett indicator. But we are on a nice prickly point. We're pretty extended from this old line. Yeah, there's a lot of arguments you can make about how it's useless, da da da. But it's still a thing that people look at when they look at stock market valuations. Same thing. We did a video talking about Warren Buffett's massive cash pile has never been larger. If you look at it from say a Berkshire is a much bigger company now than it used to be. What percentage of their assets are actually in cash? And this is the answer for there. It's like this. It's only been this high once before, effectively, in terms of percentage of assets that were held in cash. So
Yeah.
still another indicator. That's interesting. So PE, right? Another valuation of kind of stock market values, right? We're on a very expensive point here where we've been pretty extended for a little period of time. And sure, it's probably been more expensive in the past, but we're not at a point where like, oh my God, everything's like back up the truck and load it up in cash and see how much you can buy because we're still pretty extended. So these are all things that we're going into 2025 knowing that that's already the case. Yeah. Another point I wanted to make here is that this is GDP. So one of the other things that backs up the stock market valuation is gross domestic product. This is on a per capita basis, but we are also at all-time highs as far as GDP per capita in the United States. So there's something underpinning this that is not entirely fictitious, that the economy is strong and that we're producing a lot of stuff as a country on a per person basis. And so there's something to be said for why the stock market valuations are so high. And then this is total stock market capitalization. Like how much is the U.S. total stocks worth? We come back down a little bit from our high, but still a pretty elevated, point in history as far as overall stock market value.
Yep. Yeah.
So,
Ugh.
Yeah. Well, yeah, this is a negative thing that's at all-time high. This is U.S. national debt. I didn't make this chart, but I did love their little notation here of debt out the wazoo. I'm not quite sure what part of the anatomy of the wazoo is, but I'd imagine it's rather uncomfortable to have that much debt stuck in it. But $36 trillion, which is why this ties into Dylan's TLT trade a little bit, and actually my kind of small cap index investing, thesis. Um, when you look at the projections forward about the national debt, not only do we have our primary deficit, meaning we're spending more we're taking in every year, when you actually include the interest, look how much more egregious this gets
It
over
gets
time.
so bad. It's so stupid. It is.
Yeah.
I'm not even gonna get started.
And, not to get political for you here, but yeah, we're going to have a rather unorthodox, kind of change here in our executive branch of the U.S. government. So one thing's for sure is that the predictions of old are going to be thrown out the window because it's going to be much better than this or much worse than this. Probably not going to be within like a normal cone of certainty. It's going to be pretty extreme either way. Could be
I
better,
mean,
could be worse. But we'll
I
see.
hope I hope everyone, regardless of political affiliation, is hoping for better because that is a terrifying chart.
Yeah, absolutely.
Jeez.
So that ties in with this thesis that how long can interest rates stay elevated, right? This is the federal funds rate.
Hmm.
We have had a couple cuts here, but we're still at an elevated rate compared to where we've been for the last couple decades. Despite seeing this massive growth in the S&P 500 over that time period, we are seeing a significantly higher Fed funds rate, which the thought is that in order to service that debt, which on the previous slide you saw, it was going to get much more expensive as time goes by for the U.S. government. That rates will have to come down somewhat,
Yes.
right?
It's
Yeah.
it's like a game of chicken you just don't want to play. This is just
Mhm.
it's so bad. It's
Yeah.
not good. That's is
Put on your
also
helmet.
my thesis for TLT. It
Mhm.
has to. I mean, your rates have to go down. It just
Yeah.
it's not sustainable.
Exactly. And the other kind of disconnect you've seen that this has caused. So this is comparing the small cap versus large caps in terms of their PE ratios, right? Um, Now, classically, small cap companies have more debt, therefore they're more subject to interest rate risk than large cap companies, which particularly in the U.S. are much more. They have overabundance of cash. That's why they're doing dividends and buybacks and all sort of things in order to get the cash off their balance sheet. Whereas the small cap companies tend to have the opposite problems. They're cash poor. So when you have a higher interest rate environment, they tend to suffer more. As we're looking at this here, this is comparing the PE ratios. They are at the 18th percentile of where they should be in terms of their valuations, which is why I've been buying small cap ETFs. This is
Yeah.
another thought or way to play this whole long term interest rate, kind of reversion towards the recent mean, if you will. I know when you look at that chart, there's a much longer term thing where interest rates have been much higher for longer, but we're addicted to cheap debt in this country. We have a lot of debt at the national level. One would think logically that maybe we start to decrease the Fed funds rate and TLT trade would come into play at that point. And also this kind of small cap index investing thesis would play out as well, which is why I've been making that aspect of it.
So before we go, um, if you had to pick a couple stocks, ETFs, whatever it is that you wanted to get more into, meaning increase your weight in your portfolio for 2025, what would it be? Because people are going to ask.
So small cap Russell 2000 index is where I'm putting majority of my contribution is going into 2025.
Okay, so same actually, completely agree. It seems like that would be the most logical place. In addition, for me, also AMD and Meta, those two plus IWM. So,
Yeah.
all right,
AMD, I'd have to look at the numbers, and same thing with Meta. I don't know what a current buy price for it. I have
it's too
a
high.
chunk of it, but I don't know where I'd be buying more at this point.
It's I'm I'm hoping for a. I feel bad saying I'm hoping for a crash. I'm logically thinking there should be a crash. I don't think I'm going to be right. Full disclosure, I don't. I didn't think we're going to get 30% this year. So what do I know?
Yeah, I mean,
But Meta at like 400 looks real good if that
yeah.
happened.
All right. Hey, I'm very proud of my Meta call. Okay.
I
Yeah,
agree.
I didn't hold enough of it long enough, but I was
Same.
very very proud of that.
Completely agree. All right, guys. Vote and then check back in like a week. We'll see what the votes are. Happy New Year.
Likewise, Happy New Year.